Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today I'm joined by Ben Clark from Team S Capital and Dean Fergie from Cyan Investment Management, and we're talking about downgrades. Any investment manager will tell you it makes you sick when you own a stock that downgrades, because there's only one way the share price is going to go. But does it create opportunities? Ben, we'll start with you. One of the great performers, A2 Milk, recently, disappointed. It was a slight downgrade. Stock's down 20-odd%. Buy, hold or sell?
Yeah, I think this is now a buy again, Matthew, close to $9. The valuation actually looks okay. Profitability is sort of masked by how aggressively they're investing into the business. The Fonterra deal will turn out to be material. So suddenly it's out of favour, and I think that's probably a good buying opportunity.
Dean's still growing at 60-odd%, but the market said not good enough. Bang, down it went. A2, buy, hold or sell?
I've been a bit annoyed that I've probably not been on board this, but I'm going to remain a seller on A2 Milk. I think it's priced for perfection. It's over sort of 40 times earnings. I think when businesses start to not be perfect, they get hammered by the market. They've got 30% market share in Australia, so I think that's getting pretty toppy for an FMCG. So I'd expect it to trade weaker, but Ben or I, one of us will be right.
Okay. This stock only a few years ago seemed new and fresh. Now it seems old and beaten up. JB Hi-Fi, the electronics retailer.
Yeah.
A few downgrades. Buy, hold or sell?
I get really annoyed when stocks quote weather or retailers quote weather as a downgrade. But I'm going to say JB Hi-Fi is a hold. It's got a great brand name. It's got amazing market presence, super buying power. But there's ongoing competition from the online retailers. Like margin pressure is going to remain, but they've got a great brand, so I'm going to say hold.
It looks, it's had a couple of downgrades. It's come off probably 30%. Looks pretty cheap. Multiple not high. Buy, hold or sell?
Yeah, I think it's a hold as well. So, it's on about 12 times, which I agree. Valuation looks good, but the sentiment to the stock, even if the structural sort of tailwinds take longer to present, the market's still second guessing it, and you just don't feel it's ever going to trade at sort of the PE maybe it deserves at the moment. So I'll be a holder.
Okay. Smart parking. Felt like dumb parking recently. Internal problems with management, businesses in the UK picking up fines from car parks. Strange situation. Buy, hold or sell?
Yeah, I'd sell this one, Matthew. This has been a company that's overpromised and under-delivered or under-executed for years now, and this is just another sort of series of unfortunate events. So better off looking at other companies to me.
Okay. Wasn't smart to own the stock either, Dean. Buy, hold or sell?
No, not up until last week. I agree, it's a sell. I think Paul Gillespie's done a good job in getting that business to profitability over the last 5 years, but when you get rid of your two biggest managers in the UK, where 85% of their revenue comes from for sort of corporate not meeting corporate policies, I think it's really opaque and worrying for investors, and it won't get re-rated.
Okay, all right, here's your chance. Something that's downgraded, something that's on its knees, but it's only a hiccup and it's going to go a lot better. What have you got for us?
That's what we think. We think Experience Co. They've downgraded a little bit because of again, some poor weather, but we think that's sort of natural in an adventure tourism business. They've got great organic growth, they've got greenfield opportunities, they've got acquisition opportunities, and we think so long as the currency doesn't get too strong in Australia, we think adventure tourism here's a great place to be, so Experience Co.
All right, Ben, you'd be probably slightly bigger in the market. Have you got something that's tripped on its own shoelace and now you're ready to go again, ready to run?
Yeah, look, Invocare would be the one for me, Matthew. It's former sort of market darling. They're going through a very aggressive reinvestment program at the moment. I just think there's question marks in the market about why they're doing it, the returns, and there's also been an eye on what's happened in the UK to a company called Dignity. But we think the competition issues in Australia are very different to the UK and are overstated. Great management team. There's obviously a structural growth story there, and a recent sort of weaker quarterly DEF rate. Unfortunate for the company at this time, but it will revert back to the historical norms. So I think it's a good buying opportunity.
Well, there you go. Downgrades create opportunities, from skydiving to organising your funeral. Just take a Panadol, everything will be okay and you'll feel better.